my name is Pierce Coyle. I'm based in Ireland, in Dublin, in Ireland, and I am from a venture capital fund called Deeptech Seed Fund, and we are a little bit unusual. We invest very early. We invest before you have finished developing your product, or finishing developing your science, and before you have actually begun to get paying customers. So we've spent a lot of time thinking about what what works, what is going to suggest that you are going to be successful even at that early stage, the stage you are at now, more or less, tiny bit later, and you'll see that in a moment. So I'm going to. I was telling Huiem and Francois that I've given a talk like this a few times to programs that they've had, and this morning I started writing up notes because I need to have a better way of delivering this message. So I ended up creating a completely new presentation in just this morning. So I hope this goes okay, and I remember what's on my slides. But so bear with me. But so so this is all about probability. And if you're very rational about this, and you say, okay, most of your ventures are going to fail, therefore you should all just go home. Okay, don't bother with this at all, unless you're willing to do a lot of work and get into, like, understand that the probability is low, but the work you need to do to increase that probability and ultimately be successful is very hard work and requires really big commitment. But if you're not willing to do that, then you really should go home. So let's start there in the kind of low probability situation. So I've done some interesting reading recently on the question of probability, and this book is really good. This is about rare events, highly improbable events, and it's very entertaining, actually. It's about a kind of boring subject, but it's very entertaining. And so hold that thought for a minute. And then the other thing I read about lately is about, sorry, new presentation. I get back into my train of thought. So the other presentation I read lately is related to this town of Carrick and Suir. So this is a very small town in Ireland, in County Tipperary, and it's where my mother is from. Not where I grew up, but it's where my mother is from. And also from Carrick and Suir is an English entrepreneur called Mike Lynch, who unfortunately died very recently because of a Black Swan event, a very improbable event. So Mike Lynch was a very successful entrepreneur. He had one of the biggest exits by any tech company in Europe in the last number of years. He sold his company to Hewlett Packard for about 3 billion. And his company was about predictive analytics. And it was all based on Bayesian probability. And his boat, which hopefully isn't blotted out by the video, the name of his yacht was Bayesian. He obviously made enough money to have a yacht like this. But ironically, or unfortunately for Mike Lynch, he had parked the yacht in Italy, and it was hit by a storm, a highly improbable storm, and essentially a vortex, a whirlwind came in, and expecting this to be a highly improbable event, they had not closed the hatch covers, so they had not. They must have thought it's such an improbable event, the opportunity cost of keeping the hatch covers closed is not worth it. So they all drowned. So Mike Lynch, unfortunately, is dead. So that incident caused me to read about Bayesian probability. And Bayesian probability is at the center of almost everything in AI at the moment, and everything to do with large language models. It's all about predicting what is going to happen next based on what has happened in the past. So the probability of one event given the fact that another event has happened. And I'm going to use that logic. So I've ended up reading about Bayesian logic. It's absolutely fascinating. And I'm going to use that logic in describing to you what it is I want to tell you today, which is about, what you can do, what you can do to increase the probability of the success of your event, and how you can demonstrate that you have taken such measures, how you can essentially show that you have been successful in taking such measures. So I will use some terms throughout this, and in the literature about Bayesian probability, or Bayesian theory, they talk about prior probability and posterior probability. So looking at you all as a group of very early stage founders, even though you're science-based founders, the prior probability, in other words, knowing nothing else about you, just taking the sort of macro view of the probability of success for such ventures, the prior probability is very low. So, however, if you apply certain tests And if you do certain things, which I will advise you to do now, then you can end up with a much higher, what's called a posterior probability, which is the probability that results, the probability as it looks after something else has happened, which is you have passed some of these tests. So let's get straight into it, and I will try and make this terribly logical. So let's imagine you are starting a business. Forget about deep tech and forget about science-based ventures for a moment. And just briefly, I will explain what I mean by deep tech. So an ordinary, a typical business, somebody says, okay, I'm going to, I'm going to start a pizza restaurant. I've got a great idea. I think I could be good at this, and I'm going to. A friend of mine has a premises that's cheap. I'm going to use it. I'm going to go in there, and I've done nothing before, but I kind of think I'll figure it out as I go along. So I start the business, and I kind of develop the product as I'm going along. Or if it's a software company, you get started with an idea and you sort of promote it before you've even developed the thing, and then you get going. It's not that hard to actually create the thing. With deep tech, it is the other way around a little bit. You kind of create the product first, or you've been working in the lab on something for years, and then you have some kind of a breakthrough that makes you think, wow, this is significant. I could turn this into a business. So you kind of start with the some of the product development, and then you begin to commercialize it. But if you look at a classic sequence of events in the creation of a business, obviously, we can all agree if there's no business idea, there's no chance. The probability of success is zero. That's sort of that's the starting point. Next one is, somebody gets an idea that sounds really good. And, the classic thing here is somebody might look at, for example, Airbnb or something, and they would say, I had that idea. I thought about that. Remember we spoke about that, and I said that would be a good idea. But they do nothing about it. And that's really common. There's lots and lots of people have these crazy ideas, or will bore you. Or, I mean, if they hear that I'm an investor, they'll say, oh, I was thinking, I have this idea, and blah, 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 blah. And I'm thinking, oh my God, get me out of here. So ideas that you do nothing about are obviously, go nowhere. Now, a big step, and this goes back to my first point about you being willing to commit time and really commit to something. A really, really big step is for some clever people who are hardworking to say, I am actually going to try this out. I'm going to commit a whole bunch of time to trying to make this a success. And that's actually a surprisingly big issue in deep tech, because there are a lot of deep tech ventures, and maybe even some of you will be in this position, but just so listen to this very carefully. There are a lot of deep tech ventures that show up to investors and they say, hey, I've got this amazing new material. It's got incredible tensile strength. We've been working on it for the last 5 years. I'd like $500,000 of investment for it, or I'd like $1 million of investment to it. Oh no, I'm not going to work in it. No. I'm a lecturer. I've got a really nice job in the institute. I've got a pension. I've been there for years. I'm actually a professor. And no. I want your money, and then we'll hire somebody in to run the company. And they can do it. Like, that does not work. The inventors have to be willing to commit significant time to it. It absolutely doesn't work unless the actual original inventor or one of the co-inventors is willing to go full-time into venture. It's a really big issue in deep tech. What I've just described to you is incredibly common. You'd be amazed how often, I would say several times a week, I get a pitch that's like that, where the academics involved are not willing to actually go into the venture. So being willing to commit to it hugely increases your probability of success. Now, just for completeness, I'll just mention desk research on market sizing. Now, this is very important as well. It's quite easy, and I'm sure most of you have done something like this already. So, for example, if you have some amazing new nutrition technology or nutrition approach, whatever, and you say, okay, it's actually really, really suited for the stage when babies are being weaned and they're just starting on formula. This will be really, really valuable there. And you say, okay, so there's world population 7 or 8 billion. There's, I don't know, 500 million babies born per year, or some big number. And then you say, okay, well, this will only be relevant to the babies born in OECD countries that are more prosperous, and that's still maybe a couple of 100 million babies per year. That's fine. So very simple research says you, yes, there's a market. There's enough. It is applicable to a large enough group of people. And then conversely, you might have something that say, okay, this is going to be really, really useful for improving the efficiency of PWR nuclear reactors, for example. And you say, okay, well, there's 300 or whatever there's only hundreds of nuclear reactors in the world. And then you work out that there's maybe only 50 of them are PWR reactors. And then you look further and you see that entire type of reactors being decommissioned. Therefore, there's actually no market. Nobody's going to spend any money on something that's on the way out. So simple desk research will kind of give you a quick idea as to whether there could be a market. Approximately how many customers are there. Again, pushing up your probability. And then hopefully you are all at the stage where, as a result of something that you have been working on in the last few years, you have some kind of scientific breakthrough. And you are all probably well aware of the state of the art in your field, and therefore you logically think, okay, I have something special. I've got something here where something that nobody else in the world has, or I am ahead of everybody else, or I'm closer to solving the key problem than anybody else is. So you've got to have that. That's the defensible deep tech. Defensible meaning nobody else can do it easily, or you've got a patent, or both, ideally, or there's some trade secret. So there's you have what a lot of investors will call an unfair advantage. There's something that you have that gives you an advantage over everybody else. So this is where this is the stage you're at now, and you may have done these in the opposite sequence to the way I presented them here. But you hopefully are at the stage where you have done all of these things, and then somebody gave you money, or you found these nice people in the Pioneer program, the Deeptech Founders program, and the Guillaume and Francois and those guys seem to be so nice. I'll come along and I'll listen, and then this crazy guy from Ireland comes on and starts telling me we're all going to fail. So that's the stage you're at now. So you think, okay, great. I've got some kind of plan. Like I went into this program. I'm really excited. The other people seem reasonable, and I've got a plan to make this to actually do this. 5% probability. That's pretty challenging. Okay, so what can I do? What can I do to improve that probability? How can I prove that my plan's actually going to work? So, in the immortal words of the Mike Tyson, who's a very, very divisive character, he was paraphrasing Napoleon Bonaparte, but he probably didn't even realize it. It doesn't work. You make a plan. You're in the privacy of your own home or in your university lab. You think, this is what we're going to do. This is how we're going to take over the world with this product. And then you get out to the market, and suddenly your assumptions all get thrown in the bin. It's all like nothing works. So you need to get out there with your idea, and this is mostly what I'm going to spend the rest of this talk about, is how you get out there with your idea, and how you gather the evidence from getting out there to show that you really have something. And getting out there and talking to a lot of people about it is difficult. It's often something that scientists find very hard to do. They've never done something like it before. A lot of people are really uncomfortable doing it, but it has to be done. And you either do it yourself personally, or you get some really friendly business advisor, business development person with whom you can work really closely, who's going to do it for you. But most likely you need to do it yourself. So the steps to doing that are essentially, again, desk research. You say, okay, so I've got, go back to my baby formula idea. So, okay, I'm not going to go knocking on the doors of 100 million first-time moms out there. I'm going to instead, okay, you identify that there's actually about 30 companies active in infant nutrition, and you identify these companies, and you say, okay, well, the people who will really understand what I've done are maybe people who are got like masters or PhDs in nutrition within those companies. So sort of high level R&D or sort of science people within those companies, and you try to identify those, which is actually sometimes quite easy. I mean, you can look for keywords in their LinkedIn profiles. You can easily on LinkedIn you can see everyone who works for a company. You can look for certain words. You'll find the people, and those people will respond to you. You can reach out and say, hey, look, I've just completed a PhD in, this area of nutrition, and I believe I've got something that's highly applicable to one of your products. You can name the specific product, and those people will say, okay, wow, that's interesting. So they will connect with you quite easily. You're just saying, I'm looking for your advice. I want to have could we please have a call? I'm just exploring the possibility of commercializing it. Make it a really kind of a soft ask, and it's kind of scientist to scientist. You will get those conversations going relatively easily. And very often those people are very happy to hear from somebody who kind of is at their level at their levels scientifically. So just a moment. So you need to get out there, and what happens is, and I've seen this a bunch of times. There's some programs I work with that do this very systematically, and the iCure program in the UK, for example, they insist that the scientists speak to at least 100 people in the market. And what happens very often is they will go out and they will speak to the infant nutrition companies, and after the second or third conversation, they realize that one of their fundamental assumptions was completely wrong. And there's a really good reason why the infant nutrition market is completely not applicable for what they're doing. But the guys say to them, have you considered animal nutrition? And then they go off to one of the big animal feed companies. And after a couple of conversations, they realize that actually the weaning of pigs is a point at which there's enormous value add in terms of weight gain for the animals just at that stage. And they get into more detailed conversations, then suddenly they realize that there's actually a really compelling proposition for their technology, not where they thought it was, but in somewhere else. But there actually is, like they actually have a set of potential early adopters who are really interested. So that is how that plays out typically. You will start with a theory as to where your market is, but only by getting into the ring and talking to the people do you validate that it is actually there, or maybe you end up pivoting once or twice to somewhere else. And that's what you absolutely have to do. And even and it doesn't matter. I mean, like, for example, I'm describing the situation in relation to, I suppose, relatively straightforward, products with materials or, nutritional products or whatever. But even for products that have long regulatory cycles, there's a similar analogy, because you may be assuming that at a certain point in your development of your treatment or whatever, that you will be able to get traction with drug companies or traction with patient groups or with some of the research organizations that are specialized. But you have to speak to them. You have to get out and actually get engaged with the groups so that they can say to you, hey, look, I really like what you're doing there, but if you could just focus instead on this, then we have loads of funding available for that. There's too much stuff. We have seen a whole bunch of pitches for exactly what it is you're saying you're going to do. So I'm sorry, that's not of interest. And the people in the market, like the potential end customers or the patient groups or the specialist investors, will give you a really clear guide as to what's already going on out there that you won't know about, because those people are operating in stealth mode, but they will often know. And so they can point you in a slightly different direction. Say, look, so don't go there. There's too many people trying to do that. But if you could you focus on this instead? And from that kind of iterative process and engagement, you hopefully will end up in a situation where you now have identified a gap in the market and you have a set of people that are interested to actually engage with you really early on. And if you are on the right track, if your breakthrough is really significant, then people will engage with you. You don't have to wait for a finished product, and you don't have to wait until it's perfect. I mean, there is an audience out there for the imperfect, but kind of the sort of imperfect breakthrough. I mean, the people who are expert will understand the significance of your sort of TRL 4 or 5 level, thing that you've proven in the lab, or thing that isn't quite finished yet. And if there is a very big market for what it is that you are hoping to eventually create, then there will be a subset of that big market which needs it urgently. And it's the people who need it urgently who will engage with you now. They say, look, I'd rather it was finished, I would rather it was all approved and everything, but you are closer to having something in the market than anybody else is, and I need it urgently, therefore I will engage with you. And so there is a set of early adopters that you can engage with. And if there are none, if there is nobody who will engage with you after you've gone to have 50 or 100 conversations, then you should conclude that you're wasting your time and just go and do something else. So let's go a little bit further. So there's two. So what I've described up to now is this idea of going out and, talking to the market and saying, hey, I've got this, I've got this idea, I've got this nutrition product or whatever it is, or formula or something. And getting to a point where you have, as a result of those conversations, you get to a stage where there's a whole bunch of people that are saying, yes, it's really interesting, I really like, yeah, this is really interesting. Okay. And so maybe if you started speaking to 10 and you ultimately approached 100, you got to speak to about 60, and there are 10 of those that seem to be quite interested in what you're talking about. Now that's good. It's better than not having 10, but there is a next level up that you need to move them to. And that is getting those 10, not just from a friendly phone call where you can say, great, 2 months ago, I spoke to, in the course of July, I spoke to a whole bunch of companies and 10 of them were required. That was back in July. You don't just leave them there in July. You sort of try and go back to them and have a level of engagement that means they are continuing to deal with you. It's not just a point in time where they said they were interested, but rather you're able to say to them, okay, so you're interested. You seem to have an urgent need for it. Let's figure out a way that we can begin working together now, so that as we complete the development of the product, we're actually able to do some work with you. We're able to sample it, or we're able to test it with in the situation that's relevant to you, or test it with your product or whatever it is. And so what you need to do is get a level of commitment from them, and I'll talk about the different levels of commitment shortly. But what you also need to do before once you start to make progress, you get to a stage where, okay, I think we're onto something now. I've had 2 animal nutrition conversations and it seems really interesting. Then you step back and say, okay, great. Now, what could we do next? So what would be a logical next step? Is it that they want us to prove that we can make this in quantity, or is it that they want us to see how it works alongside certain other ingredients or something like that? And then you say, okay, right. So what we could say to them is, yes, we're willing to do that experiment, and dedicate time to working to meet your needs specifically. But we call that a pilot project or a proof of concept project. And we would like to get like all our expenses paid and a contribution of 20 grand or 20 or 10, 20, 30 grand. Okay. And you have a proposal, you make a proposal, and there's a little link there. Just write that down, bit.ly early adopter proposal. Just read that. You'll get a bunch of ideas from that as to how to write a proposal like that. And if you're dealing with large companies, and if you're on the right track and they need your thing urgently, they would absolutely no problem paying 10, 20 or 30 grand on proof of concept. It's really commonly done, okay? It's not hard to ask for. If they are really interested in your science, and especially considering, your science possibly has cost millions to develop, paid for by the generous taxpayers of France or Ireland or Cyprus or wherever, then they're a commercial company and they figure, okay, we can get early access to this. I just have to pay these guys 20 grand, and that gets us into the beta program, which means we'll get the finished product before anybody else does, and we didn't have to pay the millions to develop this thing. These are companies with big R&D budgets themselves, so they will appreciate that they're getting something relatively cheaply. So it's not as hard as you might think to ask for money at a really early stage. But what I'm saying to you is that when you start that process of reaching out to determine interest, have in your head, have a proposal drafted, have something ready, so that if they say, wow, got that is really interesting. Okay, I really like this. Okay, right. So what do we do next? Where can we go with this? And you say, well, I'll tell you what we can do next. Why don't we make a proposal to you for proof of concept project or whatever, or why don't we sell you some early quantities of the thing, so you have something ready for them to allow a continued engagement with them. And what you really must do is that what's really important is that you stay engaged with them. You don't sort of say, I'm raising money now, please, hey investor, please give me money because last July I spoke to some people and they were interested. You want to be able to say, no, we determined interest and now we've got 4 proof of concept projects engaged. 2 of them are paying this. One of them says they can't pay until we can show that we can produce it at quantities of tens of kilos, but they're really clear that there's a huge business opportunity, and they're quite happy to talk to investors to confirm that. So you make a tactical decision that with some companies where the opportunity is large enough, yeah, that you will do it without a fee, but you've got some people paying, and then other companies you'd say, okay, we're not we're not charging them a fee, or they're not paying us, but they are allowing us to use their facilities, and they are also committing quite a lot of time to the proof of concept. So from an investor, an outsider point of view, there's evidence that people are willing to meaningfully commit to doing something with you, and that is highly predictive of success. And you know, I mean, the numbers here are very speculative, but it pushes you up more towards the sort of a 10 or 20% probability, down from the really low sort of single digit probability. And there's a big range. I mean, it depends on the level of commitment, how excited they are, and the nature of that commitment. But it is huge. It is like one of the few things getting this level of commitment is one of the few things you can do at this stage, and it makes a huge difference to the perceived probability of your venture. Now, so I'm going to show you a tool for presenting that, and then I'm going to take a whole bunch of questions. I can see this things in the chat, so I'll take questions at the end. So there is a problem raising money really early, and the problem for really early stage ventures like you is that you don't have the key metrics that most of the investors are looking at. I mean, ultimately, businesses are valuable based on how much profit they're making, and a profit is a subset of the revenue they're making, and you know, they're both kind of heavily dependent on the annual growth rate of the venture. So those are the kind of classic metrics for valuable companies. You have none of them, of course, and you know, you might have a small amount of revenue. You've got 2 or 3 people paying you 10 or 20 grand for a proof of concept, then okay, you might have some revenue, but you have no product revenue because your product probably isn't finished yet. So it's still, from an investor point of view, it's still considered very high risk. But what you can work to show is actually some levels of commitment that are evidence of future revenue. So the thing you have to understand, so most of your eventual businesses will be business to business in nature. You will be selling to other businesses, and if you have a complex product, or you know, product that is based on science, there is a long sales cycle. It takes a lot of discussion from the initial contact through to them actually spending money with you and your product. And there's a lot of different stages of that. You know, there's some of them are kind of like measurable, like they'll sign an NDA with you. They'll go to the trouble of doing that. They'll have a sort of second meeting, and then you'll make an actual proposal to them for a proof of concept. And there's a stage where, okay, we've actually made a proposal to them. Then they accept the proposal. And then, you know, so you've got a paid proof of concept. Next stage then is you've got past that, and they pay you for a sample, for some like sample quantity of what it is you've got, for example. And then the next stage might be they've actually placed an initial order. So there's a couple of kind of very distinct phases. Actually, sorry, before they place the initial order, there's a couple of other kind of identifiable steps along the way. And those are measurable. You know, like if you're saying we have 5 companies that we're closely engaged with, you know, 2 of them are paying for proof of concepts. Another one is we have a monthly call with them. They want to see updates, and they're proposing to commit to us that once we're able to make it a sort of 10 kilos. So being able to show how many different organizations you have at those different points in the sales pipeline, in the stages of the sales process, that is measurable. And what I'm going to talk about now, just very briefly, is the Deeptech Seed Fund Scorecard, which is the tool we provide to allow you to present that. And this is a tool that's being used by a whole bunch of incubators around Europe who are working with ventures at your stage. So the main part of it is about traction. There's a piece about cap table as well. I won't talk about that today. The cap table is a very problematic area for science-based ventures, but let's just stick with the traction part. So by traction, the term traction is used. I mean, it's used to mean like you're trying to drive your business forward. Are you getting any grip? Is anybody actually paying attention? Is anybody interested in what you've got? And so the first exercise to go out and gauge interest is presented in this way. So just simple. This is often referred to as a sales funnel. Sales funnel, because it's shaped like a funnel. It's wide at the top and narrow at the bottom. So so you need to be able to show that you've actually done a significant exercise. You've gone out quite widely to sample. It's not, I'm a sort of French company based in Marseille, and I've identified there's 5 good-sized companies in the Marseille area that might be interesting, and I've spoken to all 5 of them. Aren't I great? You need to actually show that there's a potential international market for what you've got, that you actually are world leading. It's not just 5 local companies who think, well done, that local entrepreneur, I'd really like to help that person, or maybe all 5 of them are people who are places for your relations work or something. You need to ideally show that you've gone internationally and you've gone out to a large number, and this is a typical, I mean, this is a typical, it's pretty brutal. Like the majority will not be interested in you at all. So you end up in quite a small percentage of the like the number that are still engaged is typically a small percentage of the number that you approach. But you've got to show that you've done this, and you've got to show that you've done it internationally. So that's good. Having this kind of level of interest. So I still have 10 people talking to me. They're still engaged me in some way, but I've got 5 committed. Oh, that's really interesting. Now, so the committed is where what's interesting. Now, actually, these numbers don't add up. I only said 5 committed, but this actually totals to about sort of 13 or something. So ignore that for a moment. So now this is the key part, is what is the commitment? Like, what is that level of commitment? Now, the example I use here is, the example I use here is, imagine there is a company that is making some new material, and it's got maybe some incredible tensile strength. And in the lab, they're making it at gram scale. And they've been able to demonstrate incredible tensile strength, which makes them all excited. And they think, okay, they're going to solve, really big challenges in sort of construction of bridges or something. But they're only able to demonstrate, they're only able to show it at gram scale. And when they do their customer outreach exercise, a lot of the people they speak to say, okay, look, that looks really promising. That's pretty exciting. I'd really like to keep talking with you. But I've seen things like this before, and a lot of them never managed to manufacture or to produce the material at kilogram scale. So come back to me when you've got the kilogram scale. Or in a life science venture, it might be, you've done lab trials. Come back to me when you've done non-human primate trials, something. So every venture has a set of stages like this, and ideally, obviously the easiest thing that people can say is, hey, come back to me when you've got a completely finished product and you've got all the necessary approvals. That's not what you want. What you want is to find people who will suggest some accessible next step, something that you can do without crazy money. Like if they say, I won't talk to you until you've done, human trials, and that it's going to cost you 10 million to do that, and you're never going to get 10 million, and that's just useless. So you've got to find some if you're at gram scale now, you've got to find the nearest point at which some people will engage with you. So ideally, there will be some people who will say, okay, I'm really happy. I gotta click this. Let me know. So ideally, you'll have some people who will engage with you now. They'll say, okay, look, I really need this. So let's do some kind of a trial. Let's do some kind of proof of concept. And the easiest one, the minimum commitment is they'll do a free trial, which is better than nothing. It still shows people are engaged with you. It still probably suggests that they are committing effort on their part. Next level up is invest in kind. If you can say, yeah, that they're putting a team on this and they're going to give us a lot of material, or they're going to share data with us, or something like that. You can say that's good, but better still is if they'll actually pay. Cash is king. If people are actually willing to pay you now for proof of concept, that is very powerful, and investors respect that hugely. So, but people giving you money is very, very predictive of the thing actually turning into a real revenue generating product. So to try and do that, and go back and look at that early adopter proposal thing. I'll send these slides to the guys after it, so you'll get these slides. Then the kind of horizontal, or the y-axis here is levels of commitment, and the x-axis is stages. It's almost like time. So sometimes you'll have almost nobody committing now. It may be a situation where, for whatever reason, the stage your thing is at, nobody will or can invest with you, but if or engage with you. But if you have a whole bunch of people who say, look, if you can just get it to this slightly later stage, then yes, we absolutely can engage with you. We will be willing to proof of concept, or we might even invest in your company. And if several of these will actually confirm that, if hold on, I minimize that. If many of those will actually confirm that on a reference call, then that is really valuable too. So they may be able to say, okay, look, I can't commit yet, but yes, we have a huge opportunity for this kind of material. So look, there's nothing I can do with you yet, but I will be happy if you're raising money. I will be happy to speak to investors to say that to confirm that yes, if you can just get it to that stage, that we have a definite engagement. We're not going to sign a contract. You might get a letter of intent or something, but it's much more valuable it's much more valuable for them to simply be agreeable to take a call from an investor. So this is data. It's not about, it's not about revenue, it's not about profit, it's not about growth, but populating this table here gives you real hard data, which you're able to show to investors and say, look, I have serious traction here, and here is, and here it is. So that is the Deeptech Seed Fund Scorecard, and which is really just a kind of an extension of everything I said earlier. This is just a tool this is just a way to demonstrate that you have done what I suggested before, but actually going out and getting evidence of the market. So I'll get back over now. Okay. Ooh, I don't get rid of the annotation. I've never seen that before. The annotation is still on my last slide. Anyway, okay, hopefully you can still read it. And I'll take questions in a moment, but the key thing is you've got to apply this test. Okay, go back to the Mike Tyson thing. You don't fool yourself that you've got a viable plan until you've actually really engaged with the market. And definitely don't expect investors to give you money without this investment. I mean, I get pitches. I get people telling me, hey, look, I've got some amazing science. Here's this huge market. There's 2 or 3 of us. Please give me €1 million. And I'm saying, well, hold on a second. Have you gone out to the market to see if anybody actually wants this thing? And they say to me, oh, no, that's why we want your money, so that we can do that. And that just doesn't work. It's a chicken and egg. Nobody will give you money, and it's not that expensive to do. It takes a lot of effort, but you can do this. And then the other point, and I made this already, if you do get that evidence, don't treat it as a data point at a point in time. Engage with those companies and stay engaged with them as you go along, because they are probably going to be your first customers. And that's it. So I mean, if you're successful with that, if you start to gather that kind of evidence, then talk to me. And sometimes I'll be the only investor that might be willing to sort of engage at that stage. And I'm happy to try to do early calls if you're in the process of doing it and you're saying, what did he mean, or what do I need to do? I've great respect for this program, the program you're on. So I'll happily sort of engage with any of you. Along the way. So that's it. So that's my message to you all. I'm going to stop sharing, and then I'm very happy to take questions on that.